Would these calls include the Chinese markets when we continue to see the regulatory risk there?
Thanks for having me. Good morning. I believe so. What we have seen in the last couple of weeks has obviously been challenging for Asian investors. But within the broader space in Chinese stocks, we believe there's still fundamental value, particularly after the pullback. So we've seen quite a few stocks in various sectors pull back between 10 to 15%, and they now show actually quite compelling value for us, and we're looking into investing in some of those.
So you're actually increasing your exposure to some of those Chinese names instead of reducing them at this time?
We were a bit lucky, I would say. So prior to the harsher than expected measures that was announced in the education stock, we're slightly underweight our Chinese exposure in the Asian equity space. And that has helped us being able to take a bit of a step back and relook at some of these positions as the market has pulled back from these names.
Zhikai, if you take a look at the impact of the COVID outbreaks across Asia, where do you see opportunities if there is a stumble when it comes to the opening up and some of the tourism, gaming related trades?
Sure. I think the COVID pandemic, particularly for Southeast Asia, has been very challenging because of the availability of vaccine and the ability to basically put the vaccine into people's arms overall. We've seen various economies in Southeast Asia having to re-lock down their economies as the pandemic continued to worsen, particularly with the Delta variant that we're seeing in some economies. Having said that, we are also seeing some interesting bright shoots, shall we say, whereas in Thailand, we have now seen the experiment of the Phuket sandbox that seemed to work quite well in terms of the infection rates amongst the foreign tourism visitors there. And we are also waiting to hear from Singapore, probably during the National Day speech, where we'll basically hear if they will relax their measures once they've reached their targeted level of herd immunity through vaccination. So the living of COVID, a strategy, if you will. So in this overall context, we're probably going to see some interesting plays that's emerging in the recovery of tourism in specific countries. But again, this is probably not very broad-based. You have to be very targeted. And I think this is where our edge, if you will, in terms of fundamental equity research comes to play.
And I want to get you to our question of the day as well. Of course, throwing ahead to the US jobs report and trying to work out what the impact will be on these markets. Is there a sense that with the very complicated macro conditions that the Fed faces, but pretty much every central bank that is looking out of a way of this extraordinary policy environment is facing, what does that potentially mean for how good data pushes the markets?
Very hardcore. I think right now we are having a very interesting interplay between employment, inflation, and what would the central bankers do in terms of some of the extraordinary fiscal and monetary measures that we've been seeing. I think at this point in time, we have seen several board members from the Federal Reserve Board coming on and saying that the economic growth seems to be gaining strength. And we have also some hints that the Fed might actually start to taper its monetary stimulus earlier than market expected. So the markets have been very reactive to these measures over the last few weeks, as we have seen. I think that stronger employment numbers is probably going to put some backing to that, to the expectation that employment numbers and economic growth is indeed coming back, despite the Delta variant concerns in the US. So we still probably are having a patient runway from the Fed, as indicated. I think most of the dot plots, as well as the board members, saying that probably not till 2023, but a very, very strong employment reports might shift that forward.
What about opportunities in Southeast Asia? Because, of course, we've seen major economies, the likes of Indonesia, really hard hit by the virus. They're lagging when it comes to vaccinations. With a long-term perspective, are there some bargains to be had?
We certainly think so. I think a lot of the ASEAN stock market has actually underperformed its Asian peers, even in the overall context. And this has largely to do with the economic conditions as well as pandemic issues that we've seen in these countries. Having said that, we are also seeing fairly interesting companies that is particularly exposed to structural growth stories that we like in e-commerce, right? Today, we are awaiting the listing of Bukalapak in Indonesia. And in the second half of this year, we'll probably see the listing of GoTo, the merger of Gojek and Tokopedia. And those are going to be fairly interesting companies to look at in ASEAN context as well.